Can you confirm? Can anyone confirm if you can hear me?
Yes, you can hear you, sir.
Thank you very much. I welcome every one of you to today's class. And today's class, we are going to be brief as possible, meaning we are going to keep to time. And we are starting the class with immediate effect. We have to have this class due to short time we have, and there is a need for us to cover one or two things. So thank you very much for making our time to be on this call. Okay, can you also confirm if you can see my screen so that we start once again? Can you see my screen?
You can see your screen.
All right, thank you. So today we are going to look at events after reporting period. And this standard is covered by IAS 10. And what this standard says, or what is expected by companies to do when events, either favorable or unfavorable, occur after the end of the reporting period. Quickly, let's take a look at the major objective of this standard. The major objective of this standard is to prescribe when an entity should adjust its financial statement for any event that occur after the reporting period and before the financial statement is being authorized for issue or approved for issue by the board of directors. Then another key thing the standard covers is disclosure requirements that are expected for event that has also occurred after the reporting period and before the financial statement will be authorized for issue. What that simply means is that there are events that needs adjustment, and there are events that that need as a result of its financial impact on the financial statement or impact on the company. Users of financial to know. Then the standard deals with is when the going concern of the company is questionable. What is expected at that particular period of time? So it's something that is part of what the standard covers. So these are the objectives. And another thing, this I forget, is another part of the disclosure which is expected, which entails an entity to when the financial actually this is the and more details of this overview of the objective of the standard. So let's quickly look at the overview, and I've put up this to aid our understanding. Please, if you have any question, kindly raise up your hand or unmute yourself and speak as the class goes on, so that we'll be able to understand proper or ask questions where necessary. Let's quickly look at the overview before we begin to look at some definition of terms. IAS, we are going to look at pertinent overview of questions, which I have put up here for us to understand better. Please, let's follow up. This overview can give us the total, the whole view of everything about IAS 10. Number one, the question here is, did the event occur between the end of the reporting period and the dates which the financial statements were authorized for issue? I'm going to explain this period better for understanding. When we say when when it is reporting year end. That is the financial year end of the entity. I will explain a bit, but let's look at this overview for clearer view. So I said the event occur between the end of the reporting period and the date. Can you unmute yourself, please? And the date in which the financial statement will authorize for issue. Let's take note. If the answer is no, if the answer to this question, did the event or does the event occur between the end of the financial reporting period and the date in which the financial statement is authorized for issue, the board of directors? If the answer is no, it means that any event that is outside this period is outside the scope of this syllable. Any event that is not within this period, it shows that such event is outside the scope of this syllable, meaning it's not in line with IAS 10. On the other hand, if the answer is yes, then that triggers another question. Then what is the question? Does the event relate to the condition that existed as at the end of the reporting period? What that means is that does the event provide any evidence as at the end of the reporting period or as at the end of the financial year end? If the answer is yes, then the standard says this is an adjusting event. Then if it is an adjusting event, what is expected of us to do? Or what is expected of an entity to do? What is expected is that the financial statement should be adjusted as appropriate. Adjusted means go back and adjust the figure. If it is not there before, include the figure. And if it is there before, adjust it, whether there's an increase, addition, or subtraction, please adjust. That is the yes to the question. Does the event relate to condition that existed at the end of the reporting period? Then, on the other hand, if the answer is no, if the answer is no, then that triggers another question. The question now is, does the event mean that management will have to liquidate or cease operation? If the answer is no, then this is non-adjusting event. And what is expected of us when it is non-adjusting event? The answer is the financial statement should not be adjusted. Rather, financial statement there should be a disclosure to such non-adjusting events. Then, if the answer is yes to does the event mean that the management will cease operation or liquidate the company? Then there is, if the answer is yes, then the going concern of that company is at stake or is questionable. Therefore, financial statement should be prepared in an appropriate basis, not on going concern basis. And the appropriate basis, to the best of my knowledge, is the breakup basis. So these are the pertinent questions that overview I put up in a diagrammatical for us to understand IAS 10 better. Any question on this before proceed? Any question? All right. In the absence of question, let's continue. Somebody is not on both his or herself. Please on both. Okay, let's take a look at definition of terms. But before the definition of terms, I want to explain what the period we are looking at means. Please, let's take listen to this analogy. When we say between the end of the reporting period means the financial year end of an entity. The financial year end of company A might be different from company B, but let's use the government approved, let's say Nigerian government or our government year end, which is 31st December. That is established that the reporting of financial year end or reporting period is the financial year, 31st December. Also, let's also put it that the accountants of the company do everything at their means to get the financial statement ready on 31st of January. Are we together? And that 31st of January, the financial statement is prepared already and ready, prepared and ready by the accountant or the CFO of the company. Now, this financial statement is presented to the board of directors. Let's say on the 15th of March. Take note of 31st December, 31st of January, and now we are, I'm saying March. So when the financial statement is presented to the board and the board on their own approve, or after sitting, approve the financial statement or authorize the financial statement for issue. Now the question is, between 31st December to 15th of March, that is the period covered by IAS 10. Now, after the financial statement is authorized for issue on 15th of March, it will be taken to it will be presented to the, let's say the AGM or the shareholders at the AGM, and they also deliberate and get other approval or sign. That period of, let's say the financial statement is presented to the shareholders at the AGM, maybe 30th May or 15th of April. Take note that the period covered by IAS 10 is 31st of December to 15th of March, when the financial statement is approved or authorized for issue by the board of directors. That is the period covered by IAS 10. So what that means is that any event, either favorable or favorable, occur between 31st of December to 15th of March. These are the events that are covered by IAS 10. Any event that is outside this period, then I will say, and the standard says, is outside the scope of the syllabus. Please, I took time to explain this because that is the basic and that is the fundamental point that must be taken to heart or taken to memory while we discuss the standard form. Is that clear? Or any question on this explanation of the period we are referring to as event after reporting period? Any question? So that I'll address it before we proceed. Any question? Okay. In the absence of no question, let's quickly look at the definition of terms. Can somebody on the call help me read up the definition of terms? Who can volunteer, please? I need a volunteer.
Hello, sir. Sorry, I have a question.
Can you explain the period again? Okay, I'll take that.
Sir.
All right, go ahead.
Hello.
Go ahead.
I have a question, please.
Go ahead.
You know, in Nigeria, for example, the period allowed by law is 6 months after the accounting year ends.
Okay.
Yeah. So, which month should we, how will I put it? Should we have a cutoff date? Since it's by the June 30th, everything should be ready. From your example, which month, which date should we cut? If the accounting year end is 31st December, and by law you have to round up your this thing by June 30th. So when should we have the cutoff period to classify as event after the this thing?
Okay, thank you. The 30th June you refer to is based on the tax perspective or the tax law in Nigeria. However, we are looking at IAS 10, event after reporting period. Like I explained earlier, there are two dates that must be taken into cognizance, which fall into the dates now is the in between is what we are looking at as the IAS 10. What is the date? I mentioned the reporting period, and I gave example that in Nigeria, let's assume 31st of December is the financial year end or the reporting period of an entity. Then I also gave another example that I gave another date, which is you as an accountant, you prepare the report, financial statement, 1st of January of next year of this. Maybe in their sitting on 15th of March, take note of that date now. On 15th of March, the board of directors, after examining or maybe the sitting or whatever, approve, or if you like, use the word authorize financial statements on the 15th of that March. Now, I also went further to say, the fact that the board of directors authorized financial statement for issue, it will still be taken to the AGM, depending on the structure of the company or how big the company is. The AGM will meet, maybe, and I gave example of 15th of April, right? And that 15th of April, the report is presented to the AGM for further authorization for publication. You know, AGM will authorize or approve for publication. And on 30th June, the same financial statement is used for filing, maybe for Federal Inland Revenue Service or Lagos State Internal Revenue, as the case may be. The period, to answer your question now, the period that is covered by IAS 10 as event after reporting period is between 31st of December to 15th of March.
Analyze.
31st of December. Board of directors. These are the period that is covered by IAS 10. So whether the tax law or any other law says the financial statement was ready before 30th June is not within the scope of IAS 10. What IAS 10 emphasizes on the financial statement authorized for issue by the board of directors. If the date is known, and two, when was the financial year end of the entity? If the date is known, then between these dates, does any event occur? Is it a favorable event? Is it an unfavorable event? Does it need adjustment? Does it need mere disclosure? This is what I extend for. This answer your question. Hello, are you still there?
Yes, sir. Can hear you.
Okay, does that answer your question now?
Yes, sir.
All right. So, and I'm saying it on a lighter note again that you as perhaps maybe you are an auditor or you are the one reviewing the financial statement of your entity. If you want to comply with IAS 10, what you should come to your mind is what is the financial year end of this company? Some company year end is 30th June. Some company year end is 31st of August. Note it and when was the financial statement authorized for issue. These are the two dates that you must establish. Then between these two dates, then that is less for the financial auditor or the financial analyst or whosoever that is making use of financial statement. All right. Any other question before we go through this definition of terms? And who is helping us as a volunteer? Who is volunteering? And let's take it. We have short time. Do you have anyone? Okay. I'll take it. Hence, there is nobody. Definition of terms, event after reporting period. The event after reporting period are favorable and unfavorable events that occur between the end of the reporting period and the day the financial statements are authorized for issue by the board of directors. as I explained. Now, according to the standard did not specify or did not give details of the process of authorizing financial statement for issue. So what that simply means is that the process of authorizing financial statement for issue by the board is strictly depend on the management structure of an entity, or depend on the company policy, or in some jurisdiction depend on their legal requirements, which the company, the jurisdiction, the legal requirement of the jurisdiction which the company operates. That is what the standard says. So the standard did not say the company must for issue. So it all depends on the company structure, or depend on the legal requirement of the environment which the company operates. So please, let's take note of that. Then, according to IAS 10, as I've mentioned, events after reporting period are classified or divided into two. One, we have what we call adjusting event. Then second one is non-adjusting event. Please take notes. In exam, you might be asked, they may put the question, but please take note that event after reporting period are classified into two, adjusting and non-adjusting. Adjusting event are events that provide evidence of condition that already existed at the end of the reporting period. I will explain this. What this means is that the event occur after the reporting period, right? But the evidence, these have already given indication. There are information, there are evidence already existing at the reporting date, but the event occur after the reporting date. If it is so, if they meet this definition, then such event is an adjusted event. So take note of the fact that it must give or provide evidence of condition at the reporting date. We are going to look at several examples further to have more understanding. Then secondly, we have what we call non-adjusting events. And those are the events that are indicative of conditions that arose after the reporting period. What that means is that the evidence and the event occur after the reporting period. That is non-adjusting. However, adjusting, the evidence occur at the reporting date, but the event occur after the reporting date. I don't know if this is clear. Non-adjusting, both the evidence and the event occur after the reporting period. Adjusting events, the evidence, there was an evidence at the reporting date, but the event occur after the reporting date. So, adjusting event needs financial statement to be adjusted. Why? Let's look at that. Please attention and I'll attend to your question, or you can use the chat box if you don't want to speak. Now let's look at adjusting event properly. Like I said, adjusting event, if established, adjusts the financial statement by recognizing the amount in the financial statement. If there was an amount recognized before, there is need for adjustment, either addition, and where that event occurred, the financial effect has not been recorded before, there is need to recognize it in the financial statement. That is what we call adjustment. Now, this is the area I want everyone to pay critical attention to. What are the examples that are provided by IAS 10 as event after reporting period? There are several examples, but we are going to take it at a time. Number one, settlement after the reporting period of a court case that confirms that the entity had a present obligation at the reporting date. If an entity is having a legal case or have given a sign that this case is like we might not win it. This case has been existing 2022, right? And after 2022, which is after the year end, the court case rule, the court now ruled against or in favor. It's whichever materialize. It can be in favor, it can be against. Then, if it is so, the fact of giving evidence, an opinion that there is tendency that the company may not win the case, then there's need for provision. That means the company have a legal obligation that this court case, they might not win it, and they are expected to pay. So they make provision at the end of the reporting period. And if they doesn't, and the court case turn against them, they must go back and adjust the financial statement. Either any damage that is expected to pay. Take note of this. Then two, the discovery of fraud or error shows that incorrect. Errors can occur. When there is an error in the financial statement and it is discovered, it's a good example of adjusting event. Go back and adjust the financial statement. Three, determination after the reporting period of the cost of an asset purchase or proceeds from the asset disposed before the end of the reporting period. This means there are situations where with another company, either to purchase an asset or to dispose an asset, and they have not concluded before the end of the financial year. Came after the reporting. The standard says of those bankruptcy of a customer after the reporting period confirms that there are some of your customers in your book, and your signs must have been given or evidence must have been showing that they are not doing well. They have not even paid you for the past.
Hello.
Sincerely apologize for that break. My laptop just went off. All right. Sorry about that. Let's continue. Let me quickly share my screen. All right, can we see my screen? Can we confirm?
Yes.
Yes.
All right, thank you. Sorry about that. Unusual. Okay, so as I think I stopped at the bankruptcy of a customer, when the customer is declared bankrupt or customer is liquidated, if it's a company liquidated, there is need to adjust financial. Then the next one is the receipt of information after the reporting period indicating that an asset has been paid at the end of the reporting period, or that the amount previously recognized impairment loss for that asset needs to be adjusted. We have seen this under IAS 36, where there is a need for impairment and where there is need for reversal of impairment. So if those information came after the reporting period, then it's an adjusting event. Financial statement must be adjusted. Then the next example is amount received in respect of insurance claim. When you are negotiating an insurance claim with your insurance company, and this have not been agreed before the end of the financial year, or before the reporting period, but it has been negotiated and after the reporting period, it's a good example of adjusting. Then we have the determination of reporting period. After the reporting period, the amount of profit sharing or bonus payment. If an entity has a present legal or constructive obligation at the end of the period to make such payments in accordance with IFRS 9. There are some company IAS 19. There are some companies that pay bonus. And you know this bonus is not mostly determined before the year end. So after the year end, they now determine how much are they going to pay as bonus. So it is either it's a legal obligation or constructive. Constructive means whether it has been a routine of that entity that they normally pay bonus. So when they determine that after the reporting period, there is need to adjust the financial statement to reflect on the financial statements that the bonus will be paid. And that is that. So let me also run through the non-adjusting event. Non-adjusting event, as we have seen, only require disclosure. I repeat, it only requires disclosure, and I have specified event that give indicative of evidence after the reporting period. So therefore, an entity is not expected to adjust a financial statement, rather disclosure is required. And why are we disclosing? Because of its financial impact or its influence on the economic decision of the users of financial statements. That is why the disclosure is necessary. And the standard says, where the disclosure is to be made, then certain things must be disclosed alongside, which is the nature of the event. What is the nature of the event? Disclose. 2, give an estimate of the financial effect or impact of that event. And where an entity has not determined the financial impact, then the reason for charge should be also disclosed. If you cannot determine the financial impact, then also state why or state how or reason why such estimate cannot be made. Now, let's look at examples of non-adjusting event. 1, we see the acquisition or disposal of major subsidiary after the reporting period. When you acquire a new subsidiary or dispose of one of the subsidiary of the company, then that needs disclosure, because this does not give evidence at the reporting date, but this gives evidence after, and the event happened after the reporting date. 2, announcements of a plant after the reporting date to discontinue a major operation. If an entity wants to discontinue a major operation, or major purchase of an asset, when the decision is made, or classification of asset held for sale, or expropriation of major asset by the government. Meaning, if the government take over some of the major asset or part of company assets, maybe for public use, then church needs disclosure. Then another example is announcing or commencing the implementation of major restructuring after the reporting period. If a company is restructuring after the reporting period, this needs disclosure, not adjustment in financial statement. Then another one is destruction of major plant or of company property by fire. Or let me use the word a natural disaster. When there is a natural disaster or any event for fire, earthquake, erosion that destroy the company property, this is an non-adjusting event. Why? Earthquake or natural disaster does not give us evidence that it's going to happen at the end of the reporting period. So that is why it is a non-adjusting event. Disclosure is required. Another one is equity dividend declared or proposed after the reporting date. Note, I say equity dividend declared or proposed. We'll look at that later. What is the requirement of IAS 1? I think you guys have done it. I know what is expected when an equity dividend or dividend is declared or proposed after the reporting period. Then the change in tax rates or tax law enacted or announced after the reporting period that will affect amount reported or for current tax or deferred tax or current and deferred tax in line with IAS 1. You know, tax law can change, especially in Nigeria where tax laws are changes. When such occur, according to IAS 10, there is need for disclosure. Then another one is abnormal large change after the reporting date in asset price or fluctuation in foreign exchange rates. When there is a fluctuation in foreign exchange rates, there is need for disclosure, and it should be a major change that affect the company greatly. Then decline in market value of an investment after the reporting period, there is need for disclosure. Then look at this issue of commencing major litigation. This one means you are starting a new court case after the reporting period, not the other example we saw in adjusting event where the company have already, the court case is already existing. But this one is like starting a new court case against the company, or you are starting against another company. Then there is need for disclosure. Major litigation when it is started or arise after the reporting period. So these are the various examples of non-adjusting and adjusting event. Please, any question before we proceed? Any question before we proceed? Okay, I know the class doesn't ask questions because you guys have sharp brains. So, but if you don't have questions, be ready to answer questions when we get to examples. Okay, let's quickly look at dividends and going concern issues as covered by IAS 10. As I said, if equity dividends are declared after the reporting period, they should not be recognized or report. There is no need for adjustment for that amount declared after the reporting period. Rather, the entity should disclose. Because why are we disclosing, or why an entity should disclose? The reason is not far-fetched for the fact that the obligation is not existing at the reporting date. So there is need to disclose in line with IAS 1. I think that is very clear. Then, on the other hand, we look at going concern. There are important exceptions to normal rule that the financial statement reflect condition at the end of the reporting period. You know, if a company begin to see signs and these are turning against the company, and there is need for company to just follow up or liquidate. You know, if you go by the definition or understanding of the fact that evidence needs to be at the end of the reporting period, then you classify this liquidation as a non-adjusting event. But that is why we say it's an exemption to the normal rule that financial statement reflect condition at the end of the reporting period. So where an entity is to liquidate due to challenges, which I've stated some reasons why a company can liquidate, even we can also give know when company is expected to liquidate, then the financial statement should not be prepared on a going concern basis, or rather it should be prepared on the basis that is appropriate. And like I said, the appropriate basis is a breakup basis. So there is need to adjust all the relevant asset or liability that will be disposed and the one that will be paid. That is that ongoing concern. And there are several reasons or events that can necessitate or that can warrant an entity to liquidate. And what are some of these events? When there is financial difficulties, can lead to liquidation. When the event leading to net realizable value of lines of inventory falling to less than cost. When you are selling your inventory less than what you purchase, and this is becoming alarming, can lead to liquidation. Maybe another one is when event leading to crucial non-current asset falling out of use, maybe as a result of change in technology or develop a new technology and the company cannot meet up, can also lead to liquidation. And several examples or reasons that can lead to liquidation as stated here can be shortage of important suppliers. Where you get your raw materials, you're not getting for it to produce to keep going, and also lead to liquidation. So these are reasons or cases where money can liquidate. And how should the financial statement be prepared? The standard has also provided that. Then, before we come to a summarize or conclusion, apart from the disclosure that is required for non-adjusting events, there are additional disclosure requirements which are introductory parts and this additional disclosure. The additional disclosure here, as I said from the onset, is when was the financial statement authorized for issue? There is need for disclosure. And two, who gave the authorization? There is need for disclosure. So which means where non-adjusting event occur, disclose. When dividend is declared or proposed after the reporting period, disclose. When was the financial statement authorized for issue? Disclose. Who gave the authorization? Disclose. I think these are the claims of disclosure requirement. And in summary, event after reporting period is put here in the diagram as a summarized form. I have said they are the event that occur after the reporting period, either favorable or favorable, but before the financial statement are authorized for issue. Now, I said they are classified into adjusting and non-adjusting event. For adjusting event, it gives evidence of condition which existed at the year end or at the reporting date, while non-adjusting event gives evidence of condition which did not exist at the year end or at the reporting date. Then what are we expected to do to adjusting event? There's need to adjust the financial statement. What are we expected to do to non-adjusting event? We need to disclose. And what are we expected to disclose? We're expected to disclose the nature of the event, the estimate of the financial effect of the event, and where we cannot give that financial estimate of the financial effect, we can give reason for not giving that. Give reason why you cannot give an estimate. Then finally, when the going concern of the company is questionable, then there is need to prepare financial statement in the best appropriate way, which is, I said, record basis. and not on going concern basis. Thank you for listening, and now I want us to take questions before we dive into answering some questions that are put together here. Please, question time. Question time.
Good evening, sir.
Yes, good evening.
My first question is the period that you said the financial statements will be authorized and issued. Do you mean already audited and signed by the board of directors?
Okay. I will answer that. The standard did not mention audited. What the standard mentioned is authorized by the board of directors. So whether the board authorized financial statement before audit, I don't think any financial statement will be authorized by the board if it is not audited. So, but the standard did not mention whether it is audited or not. What the standard says is when was the financial statement authorized by the board of directors. If that date can be, if you look at the typical financial statement, I can open. I have a it's confidential. If I open my company financial statement, you see where it is stated. The financial statement is authorized by the board. Although in my company it was audited, finalized. Every other adjustment, every other necessary thing has been looked into by the auditor before it is authorized. So how it is being authorized by other entity, I don't know, by the board. Whether before audited or after audited, the standard does not make mention of that. I hope that answers your question.
Yes, sir.
Okay.
My second question is you mentioned something about breakup basis, preparing the FS on
Okay.
breakup. Please, can you go over that again? I didn't get that. What's the
breakup.
reason for preparing on that breakup basis?
Okay. I think I gave reason. Reason means the company cannot continue in business. Are you getting it? Meaning they look at these reasons. There are a large number of circumstances that can lead to going concern problems. If a company cannot continue in business, are you getting it? It means that they cannot continue to prepare, they can't prepare financial statement on going concern. Presentation of financial statement or preparation and presentation of financial statement. One of the key characteristics or key things that needs to be complied with, financial statement must be prepared on a going concern. Meaning it is the company that is existing in a foreseeable future or that are operating in business that are expected to prepare financial statement on going concern. But where the going concern is having issue, meaning company cannot continue in business, company want to fold up, company will liquidate or cease operation, then financial statement will be prepared on breakup basis. Breakup basis is one of the basis of preparing financial statement outside the cash and accrual basis.
Yes, sir. Yes, sir. Yes, sir. Thank you.
Any other question? Questions. Okay. Can someone read this for us? Who is helping us, please? Somebody should volunteer. Let's wrap up.
The management of GOPLC completed draft financial statement for the year ended 31st December 2016 on 28th February 2017. On the 18th March 2017, the Board of Directors reviewed the financial statement and authorized them for issue. GOPLC announced its profits and selected other financial information on 19th March 2017. The financial statements were made available to the shareholders and others on 1st April 2017. The shareholder approved the financial statements at the AGM on 15th May 2017 and approved financial statements were then filed with CAC and FIRS on the 17th May 2017 required. What date was the financial statement approved for issued in line with IAS 10?
Honestly, I don't think I will not use this laptop in this class. Apology once again. Apology once again. So, I believe we have seen the question. What is the answer, please? What is the answer to that question? What was the financial statement authorized for issue in the question? Who is answering that question?
18th of March 2017.
The 18th of March 2017. That is correct. So the financial statement is authorized by the board of directors. On the 18th of March 2017, the board of directors reviewed the financial statement and authorized it for issue. So now, can you also answer what is the event after the reporting period now? Which of those periods? Can you give us the range? And if any event occur within that period, is it in line with IAS 10? What is the period now based on your answer as required by IAS 10?
31st December 2016 to 18th March 2017.
Thank you very much. That is the period covered by IAS 10. Thank you. So anything that happened after 18th of March, let's say on anything from 19 upward, is outside the scope of IAS 10. Please, let's take notes. Anything that happened after 19th of March is outside the scope of IAS 10. Okay, next question. You can read this one too. Thank you.
Shortly after the reporting date, a major customer of a company went into liquidation because of heavy trading losses, and it is expected that little or none of the 12,500,000 debt will be recovered. 10 million of the debt relates to sales made prior to the year end, while 2.5 million relates to sales made in the first 2 days of the new financial year. In the 2001 financial statement, the old debt has been written off, but one of the directors has pointed out that as the liquidation is an event after the reporting date, the debt should not in fact be written off, but disclosure should be made by notes to this year financial statement. and the debt written off in the 2002 financial statement required. Advise whether the director is correct.
Okay, so who will advise the director? Do you have any advisor?
Okay, good evening.
Thank you. Go ahead.
Yeah, I'm not so sure, but I just think I think the director is actually wrong, right?
Okay.
So basically it's 10. So I think bad debts bad debts are actually adjustable, right? So you can actually adjust it after it's an adjustable event after the reporting period, right? But because 10 million relates to the reporting period, right? While 2.5 million relates to the first 2 days of the financial year. So I think that allowances should be made for the 10 million naira in the 2001 FS. Yeah.
Okay, so what happened to the 2.5?
The 2.5 is in the 2002 reporting year. So I think allowances should be made for it in the 2002 financial statement. Yeah.
Okay, thank you. Any other opinion? Any other advisor?
2.5 should be disclosed because it's relating to sales for 2021. So I think the company should disclose it.
Any other person? Okay. Thank you, the first speaker, and thank you, Ma. Yeah, the first speaker is correct. We look at this question, remember the way we answer professional question in class. When they say advice, you are not just speaking yes, the way you put it is fine, you are right, but you have to put it professionally. First, you have to define what is event after reporting period. You can also explain to the directors the difference between adjusting and non-adjusting. Then you can go further to explain that for the fact that the 10 million or give evidence at the end of the reporting period, then there is need for provision, meaning the 10 million should be adjusted to the 2021 financial statement. On the other hand, the 2.5 million, which relates to 2022 financial statement, should be written off. And that is the best answer to this question. I hope that is clear. But if you are putting it, please put it professionally. Prove to the director what is the meaning of event after reporting period. What are the why do we adjust, and why you give examples. Just state it professionally, then to convince the director that he is wrong. How that is clear. Any question on that? Okay. Let's look at the next one. You can read, Ma.
There is usually a lead time between the end of an entity's accounting year and when the financial statements are approved and signed by the directors. In between this period, there are two types of events according to IAS 10 events after the reporting
Who
period,
is that person? Please mute yourself. Mute yourself.
which
Go
may
ahead.
require consideration when preparing financial statements. You are required to identify and explain these events and state how they are treated in the financial statement.
Thank you. Who can quickly provide solution to that? Who can provide solution to this? Nobody? Dami, Lola, are you with us?
Yes, sir.
So why not prefer solution?
Sir, I'm the reader. Others should offer solution.
You are what? Oh, that is funny. Okay. Who help us?
But the two events, the adjusting and the non-adjusting events.
Okay. Yeah, adjusting and non-adjusting event. Okay, that's fine. That is part A. Then part B. Who is helping us? There are three in one question from this exercise 3. Number 1, identify, which you have answered. 2, explain this event. 3, how are they treated in the financial statements? So who is going for the second one? Mr. Jacob, are you with us?
Yeah, I'm with you.
So which one are you going for?
Okay, so for the adjusting event, right? So you have to recognize it, like you have to adjust it in quote in the first, right? So you have to recognize the effects of those events on the financial statement, right? But for the non-adjusting events, what we do is disclosures are actually made in the FS, right? Explanations are actually given as to how they will affect the company going forward. So basically, for non-adjusting events, we make disclosures, right? But for adjusting events, we recognize the effect of those changes, right? The effect of those events, right? So we make changes on the financial statements. Yeah.
All right, thank you. That is the third part. Second part, Abosede, can you help us? No, I think Abosede is, I don't know if I'm right. Or better still, Mr. Jai, Hamid, or Hamid. What is adjusting and non-adjusting events? Can you explain briefly? Or are you with us, Mr. Jai? Mr. Rotimi, are you there?
No, sir.
So, what is adjusting events?
I'm not here. I said I'm not here.
I didn't hear that. Okay. Mercy, can you answer the question on explaining adjusting and non-adjusting events? All the people I mentioned, they are not speaking. Okay, let's assume you guys understand what it is. Adjusting
Hello,
event.
good evening, sir.
All right, good evening. Go ahead.
So for the adjusted event, there must be an evidence that puts to the conditions. Then why the non-adjusted, it must be after the financial, it must be after. So that's what I want to have to say.
Okay, well, you try. You try. You try. Thank you. Any other person? Well, I want to believe that we understand this. As I said, the adjusting events are events that give evidence of condition that existed at the end of the reporting period and before the financial statement of finance for issue. Then non-adjusting events are events that give indicative evidence after the reporting period, and I explain what it means for better understanding. Okay, let's look at question 4. Go ahead and help us with it. Is she with us? Is she still with us? Tosin, can you read? Hello.
During January 2002,
before the financial statements for the year ended 31st December 2001 had been finalized, a number of events took place. Which one of these events will require an adjustment or disclosure to the financial statements as at 31st December 2001 in accordance with IAS 10 events after the reporting period?
You can plug it. Okay. Okay. So you can mention the event and let's answer what is
The company's board announced a plan to discontinue one of its operations and dispose of the plant. The loss on disposal is estimated at 2 million.
okay.
Number two.
Hold on. Let's answer in chorus. Let's answer together. Does it need disclosure or it need adjustment?
Yeah, I think this one would need disclosure.
Do we affirm to that? Do we agree to that?
Yes, it needs a disclosure
Okay. Number two, that's
because
correct.
it was discontinued.
Okay. After the reporting period. That is an example of non-adjusting event. Number two, read further.
The employees of the operation to be discontinued commenced a case against the company for constructive dismissal. The total cost could be 3 million.
Is it adjusting or non-adjusting events?
This is a non-adjusting event also.
Non-adjusting event.
So
Why is it not
require
non-adjusting?
disclosure.
Can you explain?
Because the new
The
litigation.
operation was discontinued. There's
No,
a session.
after the reporting period, right? So the reporting period was January 1 to 31st of December 2001, but the litigation occurred in January of 2020 of 2002, so which is after the reporting period. So it should be disclosure, as is a non-adjusting.
Then, so meaning there's no evidence. It doesn't give any. There's no evidence of the consummation at the reporting date. Neither in litigation. There's nothing like litigation at the end of the reporting period. That's fine. Okay, thank you. Next one.
A legal case for which the company had provided 1.7 million at 31st December 2001 to cover possible damages was unexpectedly settled in its favor.
Okay.
This should be adjustment. Yeah, should be an adjustment.
Okay, why are we adjusting? Is there any reason?
Okay, because this is a litigation that happened during the reporting period, and so this was given me to be a favorable adjustment, right? So because the company does not have any financial obligation, right? So but instead the case was settled in its favor. So I think they would have to adjust for the 1.7 million naira, which they would have made provisions for, right? So they would have to make adjustments for it. Yeah.
Okay. All right, thank you. The major key point here is that the legal case for which the company had provided for existed. There is an evidence. It shows an evidence at the end of the reporting period. Do we understand that? So that is why we are adjusting it. It's an adjusting event because the case provides evidence of condition at the end of the reporting period, not after the reporting period. Last one.
One of the company's warehouses was destroyed by fire, and half of the inventory on hand at 31st December 2001, valued at 2.5 million, was destroyed.
Adjusting or not adjusting?
I think adjusting.
Huh?
I said I think it's non-adjusting.
Okay. Yes,
Yeah,
as we
that's
said,
right.
yes, you are right.
So,
as you said earlier from the examples, any property that is destroyed by fire after or a natural disaster after the reporting period is require disclosure. And why are we disclosing? It affects major part of the company assets. I hope that is clear. Any question? Any question before we proceed to the next one? Okay. Quickly, number 5 will be an assignment or classwork. So I'll prefer us to profile solution and send it to the platform. That is exercise 5. So we'll move to exercise 6. You can read for us, ma'am. Hello, are you with us? Help us to read further from exercise 6.
Which question?
Exercise
Okay.
6. Yeah.
The skills level company is completing the preparation of its draft financial statements for the year ended 31st May 2017. On 21st July 2017, the dividend of 175 million was declared and a contractual profit sharing payment of 35 million was made. On 21st July 2017, a customer went into liquidation having owned the company 34 million for the past 5 months. So is this owned or owed?
It's owing, it's typing error. I will correct that. It's owing, like
Okay.
owing the company 34 million. Go ahead.
Okay. No allowance has been made against these debts in the draft financial statements. On 17 July 2017, a manufacturing plant was destroyed by fire, resulting into the financial loss of 60 million. Required, how should the above transaction be treated in the financial statements?
Okay. Who is helping us? Who is helping us with this? How should the above transaction be treated? Who can run through it?
Okay, so for the first one on dividends, right? I think because the dividend was declared after the reporting period, right? So during the reporting period, there was no obligation, right, for the company to actually pay dividends, right? So the obligation arose after the reporting period. So it just means that it should not be recognized, right? It should not be recognized. It should be disclosed. It should be disclosed in the notes to the financial statement. That's in accordance with IAS 1.
That is fantastic. Okay, go ahead. Okay, any other person to take up another? There are about three questions there. Hello. Okay. If you guys are not talking, let me speak. Now, let's look at the customer that went into liquidation. The customer that went into liquidation, and the company is owing the company 34 million. This is an adjusting event. Like I said, there is an evidence of condition that existed at the end of the reporting period. So there is need for the financial statement to be adjusted. Then number 3 is straightforward. I expect somebody to have answered that. Number 3 is very straightforward. On 17 July, the manufacturing plant was destroyed by fire, resulting to financial loss of 60 million. Isn't it a mere disclosure? This is what the disclosure is expected. The estimate is there. The estimate will be disclosed in the note to the financial statement. Then nobody speak about the contractual profit sharing payment of 35 million. What are we expected to do with that profit sharing? Contractual profit sharing payment of 35 million was made. Is it adjusting event or non-adjusting event?
Okay, I just want to take a guess on this one, right? I don't think we discussed anything about contractual profit sharing, but from the word itself, I don't know. For contractual profit sharing,
we did. Let me show you. Should I take you up? The slide to where we spoke about that. Maybe
Okay, so
let me.
maybe I wasn't just there. Okay. But
Okay,
I
but
feel
okay.
adjusting, yeah, I feel it should be adjusting because the contract wouldn't have been made after the reporting period, right? So I feel the contract would have been during the reporting period. So stating that, oh, the profits that are made for this fiscal or financial year, right? So this is how we're going to, I think there should be like percentages of how they're going to share the profit, right? So I think the
All right.
obligation would have arrived
You
the
are
reporting period.
in fact, you have even impressed me for this call, for this class. But can you read this so that you have better understanding? This adjusting event, right? Read number 7. This number 7. Can you read it for your own? Can you read it?
Okay. So number 7, the determination after the reporting period of the amount of profit sharing or bonus payments if the entity had a present legal or constructive obligation at the end of the reporting period to make such payments in accordance with IAS 19, which is employee
That is
benefits.
exactly. That is an example of what? Adjusting event. So let me now take you back to the question. So that's why it's better we understand the integrity of IAS 10, so that when you see any event, you're able to apply whether adjustment or no adjustment at any given point in time. So you can read the question now. See now, on 24 July, dividend was declared, as you said, it's non-adjusting event. And this is a continuous continuation of the question. A contractual what? When they say contractual, it means legal, am I right? Profit sharing payment of 35 million was made. So this need what? Adjusting. How that clear your or make you understand more of what that means?
Yes, thank you.
Yeah. Okay. So at this point, we have come. These are practice questions for you to go through at your leisure time or while you're ready. However, before we end today's class, any questions so far on what we have discussed? Any question? Any observation? Any comment? Any area you don't understand that needs explanation before we call it a day? Okay. I have no question in the comment section, and there's no question, nobody's asking. So it shows that IAS 10 is done and dusted. Meaning, if you see question in IAS 10 in exam, you're able to tackle it professionally and based on the knowledge you have harnessed today. Once again, any question, comment, observation before we bring the class to a close? Okay.
Good evening, sir.
All right, go ahead. Good evening.
I'm sorry, please, I'm still a bit confused in that accounting period, the dates. So can you explain a bit?
The date, as I said earlier, according to IAS 10, is between. When they say something is between, that is within, between the reporting dates. Do you understand the reporting dates? I mean, the financial year. Do you understand that part?
Yes, sir.
Okay, good. Then I'll give example. Reporting date of a company can be different from another company. So it's based on company year end. Then, and the date now is between the financial year end or the reporting period to the date in which the financial statement is authorized for issue. Can you see my slide? Now I explain that the dates in which the financial statements are authorized for issue by the board of directors is a thing, is not defined by the statement, I mean the standard. Rather, it depends on the management structure of an entity or the legal environment in which the company operates, right? So The date in which the board authorized the financial statement for issue is the date, that date and the date of the reporting. In between those two dates, that is when any event that occur between that date, reporting date, and the date the financial statement is authorized by the board of directors for issue, any event that occur between those dates should be recognized in line with IAS 10. However, if any event occur after the financial statement has been authorized for issue, then it's outside the scope of the standard. I gave example, reporting date 31st December 2022. Financial statement is authorized for issue 15th of March 2023. The board or the AGM issue or authorize sign for publication in May. Which date is within the scope of IAS 10? I said is between 31st of December 2022 to 15th of March 2023. That is the period that is covered by IAS 10. I hope that helps. Or
Yes,
that
sir.
answer.
Hello,
Yes,
sir.
sir. Thank you so much.
All right. Thank
Hello,
you.
sir.
Go ahead. Go ahead, sir.
Yeah. I'm asking a question. I'm asking,
Okay.
for example, now,
Okay.
is Kama specifying any date or interval after the end of the accounting year end? As in, is there any time limit for Kama for the approval by the board?
You said
Hello,
Kama,
sir.
right?
Yes, Kama. Is there any time limit by Kama that by stand so that you must, so that we now take that time as how will I put it? As we can rely on it as a time that okay, by stand so time, if so and so event should happen, this is what we classify as event after reporting period.
Okay. Thank you. Now, mentioning Kama has nothing to do with this event after reporting period. It is strictly.
No, I know. I'm only asking, is there any time limit that, apart from this thing that Kama put that they must approve, a board must approve the financial statement?
No, there is no time limit. The only time limit that
Okay, sir.
most companies look up to comply with is tax, to file their tax return on or before 6 months after year end. So most companies use that as a benchmark. So in between this period, the board of directors can issue financial statements or they can authorize it for issue. So Kama does not have any time limit for company to authorize their financial statement for issue.
Okay, but you know, in most cases, hello, sir.
Okay. Yeah, me too.
Yeah, in most cases, there is always delay and some company not filing, not pushing their financial reports out even after the, let's say, the tax limit of 6 months after the reporting period. In that case now, at what point should we have a cutoff point for the event after the this?
Okay.
If it's
Now,
not approved within maybe like let's say 6 months.
okay, thank you. Now the standard did not. I think that is, if you ask me, it can be a loophole in the standard. The standard did not define when it should be authorized, and that is why, from my explanation, authorization of financial statement by the board is strictly a management issue, or if it is based on legal requirement. In Nigeria, we don't have any legal requirement to that effect. But if there's any legal requirement in another country that says the board of directors must authorize their financial statement for issue, then it is based on that legal requirement. So in Nigeria, there are even companies that after 8 months, they have not even completed their, although I don't know whether it's existing, but if some of you are the call, your company have not prepared their financial statement on or before 6 months, that means the accountants or the finance people in that company are not doing their job, or they are not pushing enough to ensure that this report is ready. So that is my take on that. Is that clear?
Yes, sir.
All right. So we look at legal requirements. If, for instance, as you say, mention CAMA, if CAMA says your financial statement must be authorized on or before end of the third month, then that is the date the financial statement must be authorized for issue. But if CAMA does not specify, then it is strictly of management policy or structure to determine that. But if you go to another country and there's a legal requirement to that effect, then fine. But the standard did not define, like I said, the process of authorization of financial statement is not defined in the standard. And that is why the date the board authorized, always the standard say it must be disclosed. So that if you, as an external person, is reviewing the financial statement, you'll be able to point when was it authorized and when was the reporting date. So between these dates, it is covered by IAS 10. Outside this date, it is outside the scope of IAS 10. I hope that is clear.
Yes, sir.
All right. Any other question before we call it a date? It is 7:26, which is we are 1 minute outside our schedule. Any other question? Okay. Thank you very much for those of you that make out time to be on this call. And feel free to attend those exercises and practice question. And where you have any question that is not clear or any exercise question that is not clear, please reach out for clarity. Thank you and God bless you. Do enjoy the rest of your day.
Thank you, sir.
Thank you, Mr. Gabriel.
Yeah.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Good night.